Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. I've been doing a series of shows this will be the third one. Today is Monday, the 17th of April. I did one on Saturday, the 15th, and Sunday, the 16th. And what inspired this series is that last week I was asked by somebody, what are my three top reasons why I'm bullish on gold? And I gave my three reasons, and then it really inspired me to want to do a series of shows on it with picks as well that I think are going to participate in what I believe is the brewing perfect storm for gold, silver, copper, other battery metals, energy metals, and especially in the stocks. Now, why I say that is because the metal stocks right now are trading at extremely low valuations relative to the price of or what they have in the ground. And it's reminiscent to me of the year 2000. And why that's such an important factor to me is that the year 2000 was the end of a long-term bull market. And in 2001, we saw the start of a bull market for mining stocks that lasted a decade. And I actually believe we're in a better setup now than we were in 2000. And so the basic argument, or one of the key arguments, is that valuations are so cheap right now. But the big catalyst or the big mover is what's happening in the US dollar. Where the US dollar goes, so goes the price of commodities that are priced in the US dollar. And that is the most closely watched part of, or the most closely watched price is what are commodities doing in the US dollar. And so when the US dollar is strong, the metals are weak. And when the metals are weak, the metal stocks are even weaker. And 2022, or 2022, yes, 2022, got to make sure I got my years right, was a very challenging year for the junior mining stocks. It did improve quite dramatically in November, and I'm going to go over some of the reasons why, and then talk about the three key reasons that I think that the price of gold, silver, copper, lithium, and other metals are going to go up. And as they go up, these beaten down stocks in the metal stocks are going to go up even more dramatically. And I really think it's a rising tide lifts all boats kind of situation. So what I'm looking at here is the US dollar index, the US dollar against a basket of currencies. And as you can see, it topped out in September. And I think what caused this start of this decline was that the traders, currency traders, believing that the US dollar, that the Federal Reserve was going to start or at least stop raising interest rates. And it was on a very bullish or bearish trend from that September high until it bottomed in early February. In January, it had a very negative January effect and also went through a death cross in early January. Then in February, it started to gain some strength because some economic numbers came out, and it caught a pretty significant bid, traded through the 50-day moving average, and didn't make it up to the 200-day moving average. Then the banking crisis started, and it's gone into a resumption of this bearish trend here. And I believe it's got a lot lower to go. So getting back to those three reasons that I believe that the US dollar is in for a tough time, which will be very bullish for the metals I mentioned earlier, is the banking crisis that started in early March and saw the US dollar go under a lot of pressure. Now, I don't think that this banking crisis is anywhere near over. I think it's got a lot of negative, a lot of bearishness left in it. You know, the cause of that banking crisis was that companies like Silicon Valley Bank and other small regional banks, and then it reached into the Credit Suisse, you know, well-known name banks as well, was that they were sitting on a lot of long-term bonds and mortgage-backed securities, and they bought those assets when the interest rates were near zero. You know, we saw near zero interest rates post the 2008 economic crisis that lasted for about 14 years. And then in 2022, the Federal Reserve started amping up hiking the interest rates. And this put a lot of those smaller banks' assets underwater. And when the depositors figured out that these banks were in trouble, it started runs on those banks. And not only did we see depositors taking their money out of those banks and putting it into bigger banks or putting it into shorter term money market funds, the investors also left those companies in a pretty dramatic way. I remember the Monday after the Silicon Valley Bank run on the bank, there was several banking stocks that were halted on the Monday due to you know, they were just dropping through the floor and the basement and beyond the basement, and they had to halt a lot of those. And you know, these things are not isolated. There's a lot of banks and other institutions that are holding similar kind of assets as the Silicon Valley banks and the others that got in a lot of hot water in early March. You know, not one of the largest holder of those kind of assets is the Federal Reserve itself, who, by the way, to try to stop this bank run spilling over into all banks, had to, along with the FDIC and the Treasury, had to get together to backstop the depositors' funds and guarantee those depositors' funds. But the remedy for that is just going to exacerbate the issues such as the money printing, the debt, and all of these other situations. And they're still raising interest rates up to the last meeting. I think that is over with. Who knows, maybe they'll do one more or two more quarter point hikes, but I really believe that they've caused a lot of these problems. They've also caused the inflation problem. You know, 14 years of near zero interest rates, and then you hike it up to 5%. Yeah, you're going to start breaking things. And so they have been breaking things, and that leads into another reason of my key reasons to be bullish on gold and other metals is I think that the Federal Reserve has to stop raising interest rates. And the reason that I say that is you've got the banking crisis caused by these interest rates. You've got housing sales are dropping dramatically due to their high interest rates. Car sales, other big ticket items are all slowing down their sales. You've got credit cards right now. The consumer is so stretched that they have to make ends meet using their credit cards. And they're paying 19% interest rates to do that. That is just insanely high. Um, and other things that the Federal Reserve, other problems are in the commercial real estate. After the COVID crisis, people learned that they didn't have to sit in their offices and commute to work every day and commute there and back. And they are staying home. They're not going back. I just read somewhere that the San Francisco and New York are at about 26% vacancy in these commercial real estate. And a lot of that, trillions of dollars of that, has to be rolled over. And they're rolling over near zero interest rates. And what are they going to have to pay? Would you give them at the Federal Reserve rate? I don't think so. The banks are going to want a higher rate than that. So these commercial real estate is a looming big problem, and it's just one of a litany of reasons that the Federal Reserve has to stop raising interest rates. Now, they want to come off as very tough against inflation, but the reality is that they're breaking things, and now they're breaking even their favorite their favorite child, which is the banks. And that, I think, is the ultimate reason that they're going to stop. That's sort of the straw that's broken the camel's back, if you will. And so as they stop raising interest rates, I think you're going to see the US dollar under pressure. I also believe that it's not going to be very long after they stop raising interest rates that they start their next rounds of quantitative easing and lowering interest rates and increasing their balance sheet. And all of these things are very bullish for gold. And the final reason that I'm really bullish on gold and other assets is currency wars. We're now seeing that the U.S. U.S. dollar as the world reserve currency is, let's make the analogy of a wounded animal or an old animal. And when the predators see that, they come out of the woodwork and they go after that wounded animal. And the US dollar is definitely wounded as a world reserve currency. And you're seeing Russia, China, other nations all over the world that have kind of been, bullied and pushed around by the US because of the world reserve currency. And I think that they're getting kind of tired of it. And now they see an opportunity. And I don't think that these recent actions to create a competitor to the US dollar as the world reserve currency, or at least have more competitors to do your transactions throughout the world. I don't think that, that this is something that is coming out of left field. For those that are astute, you can see that the central bankers of the world, especially outside of the developed world, have been buying gold hand over fist since 2008 economic crisis. And in 2022, they bought the most the central bankers have ever bought. And it certainly looks like 2023 is on trend to surpass 2022. And so what this is telling you is that the central bankers of the world see the issues out there. They see that the Federal Reserve as the world reserve currency could have some competition, and they would rather own gold than they would US dollars. And I don't blame them. What they're effectively doing is putting themselves on somewhat of a gold standard. And I think investors should be creating their own gold standard. And getting back to what I originally started talking about, which was the key reasons that I think that I'm so bullish on the gold and silver and other hard assets, is that all of these things combined are piling up and creating a perfect storm for gold and silver and other metals. And yeah, as you can see here, gold bottomed out. I'm going to stretch back a little bit so you can see the peak last March, March. And then it went under a lot of pressure as the Federal Reserve was raising interest rates and giving fuel to a bullish US dollar. The gold price was bearish. Then it had a triple bottom in September, October, and November, and then broke out significantly in November. Blasted through the 200-day, the 50-day, stayed well above the 50. Oh, I got to change my settings here because I got the 20-day instead of the 200-day, but there it's fixed. So as you can see, it broke through the 200, the 50-day, the 200-day, and into January traded well above the 200-day moving average and the 50-day moving average. Went through a golden cross here in early January, and was on a very strong run right through to early February. Then some economic numbers came out. The US dollar got strong, gold got weak, had a double bottom here. Then the banking crisis came along and it blasted off through the 50-day moving average again. And it's sort of on this very bullish trend that actually started in early November of 2022. Some other technical indicators that I would like to point out is, as you can see here, the 200-day moving average is now in a bullish trend. The 50-day moving average is on a very bullish trajectory since way back here. And the price is significantly above the 200 or the 50-day, about $100, close to $100 above the 50-day moving average, and $200 above the 200-day moving average. So I think we've got a very bullish situation developing for gold on the fundamental reasons why I talked about earlier. You've also got very strong supply and demand story. Demand is very strong from not only the central bankers of the world, but a lot of investors, big investors, are positioning themselves in gold. And I think smaller investors should too, because if they want to protect their money against inflation, banking crisis, debt problem, out of control debt and money printing, gold is a perfect alternative. Before I get into some picks, I want to talk about something that also has come up in my mind lately, which is that, you know, the asset allocation models that pretty much everybody on Wall Street and other streets throughout the world have been sort of taught was that, you know, you should have 10% of your portfolio in gold. And I really believe that that is a very big under allocation these days. And I believe that those that sort of take the Warren Buffett philosophy or his partner, Charlie Munger, that when you see a perfect storm developing, that's when you want to be very aggressive. And 10% is not aggressive enough in what we're seeing happen in the world economy. And I don't believe you should stop at a gold standard. I think that silver also should be a big position. Copper, you know, there's a big revolution happening where copper, you need it for electric vehicles, and we're transitioning into electric vehicles more and more worldwide. And that's going to need a lot of copper. It's not just going to need a lot of copper to run those cars, but to get the energy from wherever it's coming from to those cars is going to need a lot of copper as well. And there's just not enough supply out there to meet all this growing demand. So I think copper is going dramatically higher. Lithium is going dramatically higher. Zinc and other metals are going dramatically higher. And yet, as I started by saying, the valuations of these stocks are are very cheap relative to what they have in the ground. So for investors that want to protect their money, I think they should be going on a gold standard, a silver standard, a copper standard, let's call it a metal standard, where they take much bigger positions than the traditional asset allocation has been taught, because this is a perfect storm. And so let's get into some stocks now. As I said, this is the third part of a series. In the first show I talked about a group of companies. In the second show, I talked about another group, and I've got a new group for you today. And the first company that I'm going to talk about is Arizona Silver. Arizona Silver just recently became a sponsor of my show, and I did an interview with Yale Simpson, who's an advisor to the company. Now, why I wanted to talk to Yale Simpson is because in my first report was the Allan report. I started in 2005, and I was running that until 2020 or 21. Can't even remember, when I transitioned over to Rocks and Stocks News. When I was writing reports, it started out as written reports that I sent out to my subscribers by email. I had picked 30 companies. Of those 30 companies, I believe it was over 20 of them became either takeovers or they became mining companies. And two of those companies that were taken over, one was Exeter and one was Extore. And Extore, and both those companies were run by Yale Simpson. So I've known Yale Simpson for a couple decades, and he's a very talented guy, geologist. And he's semi-retired, and guys like him, it's hard to see them completely retired. And so he's an advisor to Arizona Silver. And I got him on the show to talk about why. So first of all, I wanted to talk about what he sees happening in the market. And because Yale is a very experienced and astute guy when it comes to market trends and what's happening in the mining space. And so I wanted to pick his brain on that. And I also wanted to pick his brain on Arizona Silver. And what I like about Arizona Silver is that they are in Arizona, obviously, and they're drilling into epithermal veins. And the drilling that they've done so far has been quite shallow in the first couple 100 meters from surface. And I don't believe that they've hit the boiling zone of the epithermal veins yet. But what is quite impressive is the grades that they're getting above what I think is the boiling zone of their epithermal vein, because they're getting some very, very excellent grades above the boiling zone. But I don't think that they've hit the boiling zone. And part of the reason why I say that is, you know, you can sort of see it in the grades. And then I've looked very closely at their drill core, and it doesn't look, the core doesn't look like the primary quartz veins in an epithermal vein system yet. I think it's still very high in the epithermal vein system. And yet they're already getting very good grades. So when they get down into the primary, and I looked at one of their deepest core holes, and then now they're starting to see that continuous quartz, and that tells you that they're getting into the boiling zone of an epithermal vein system. Now, I would also add that this company has a tight share structure, and their insiders own very big positions. They've been doing some buying of late. They don't sell their stock. So the management is very aligned with long-term investors in the company, and has a very reasonable valuation and a tight share structure. Now, another important factor to pay attention to is that they have a bunch of drill holes in the lab right now. And those results are pending and could come out at any time. I think that based on what I've seen in some of their core, I think they could have some very good numbers to report. And I'm not the only one who believes that, because as you can see here, since 2023, they started the year at about 26 cents. Just the other day, they traded up to 56 cents. They closed today at 48.5 cents. They had a golden cross right here. The stock has busted well through the 50-day and the 200-day moving average. It's trading significantly above the 50-day moving average and the 200-day moving average. And as you can see here, the 200-day moving average is getting very bullish, and the 50-day is on a very bullish trajectory as well. And then you've got the price above those two trend lines. This is a very powerful chart, and I believe it's indicating that the market has a lot of optimism towards the results that are pending. And as soon as those results are out, I will reach out to Greg Hahn and their CEO, Mike Stark, and get them on an interview. But I really wanted to sort of pound the table on them here, because this is a company that has been significantly outperforming its peers, and it has a very powerful chart, pending news. All of these things are lining up for it to go even higher. So take a look at Arizona Silver, and look for that interview on my YouTube channel at Rocks and Stocks News that I did with Yale Simpson, or on my Substack at rocksandstocks.substack.com. All righty, the next company I wanted to talk about is a company called Orogen Royalties. Orogen Royalties, I don't follow a lot of royalty companies, but I've actually followed this company since it's before its inception, because I know I used to work with the CEO of the company, Patty Nickel, and we worked together for many years for a geological consulting company. And in fact, his uncle was our mentor in geology. Patty is a unique person in the mining sector, because not only does he have an MBA, but he started putting his boots on the ground in mining exploration back when he was in his teens with his uncle. So he's not only does he have an MBA, but he's also a boots on the ground kind of guy. And at Orogen, they put together a very powerful group of assets that I think is, it's part of the reason why they've had this big breakout here in the late part of 2022. Kind of went sideways for a few months, but are breaking out again. And the reason for that is that, it's a combination actually. They've transitioned from a royalty company that held royalties in a bunch of projects that were hoped to be mines of the future. And then the Ermitaño mine that they had optioned to First Majestic has been a mine now, and has been a excellent producer. It is the best performing mine that First Majestic has, and Orogen owns a 2% royalty on that. So that's a great asset that they have. They've also got a 1% royalty on the Silicon project in Nevada that AngloGold Ashanti is developing. And one of the things that helped that pop was that Anglo announced that their maiden resources, about a little over 3.5 million. I think now it's over 4 million ounces of oxide gold. So this is stuff you can open pit. produce, process a lot of tons every day and make good money off of it. And that's an important thing for Orogen Royalties and their 1% royalty. Not far from the Silicon resource is right below it is the Merlin, where Anglo has been drilling up a storm there as well. And so it looks like Anglo's got something that could be in the 10 to 20 million ounce gold range, and Orogen has a 1% royalty on it. And they've got a whole slew of other projects that are optioned out to juniors and mid-tiers and major mining companies, and then that's sort of their pipeline of what they're going to hope to become future royalty companies. And I don't follow a lot of royalty companies, but I do remember very well the performance of Franco-Nevada back in the 1990s, when it was a very difficult time for the price of gold, and they were one of the top performing gold stocks, a royalty company. And maybe Orogen can turn into a mini Franco-Nevada, which would take it a lot higher than its current valuation. But what really something stood out to me recently when Pierre Lassonde, who built and ran Franco-Nevada, talked about how great of a business model the royalty business is. They don't need a lot of employees. They let the risk go to the other companies that spend the money to find the mines and build the mines, and they sit back and collect the checks. So Orogen Royalties is the only royalty company that I follow in my reports. And I think that that's one for you to take a look at as well. Now, one of the companies that is a producer is Orla Mining. And Orla is a company that I originally had as a pick back when they were under $2 a share. They were moving through the development discount window in the Lassonde curve. And then they were in 2022, I got even more bullish on it because they were transitioning to production. So they were going, there's two big moves in the Lassonde curve. One is on exploration success. Then you go through the development discount window for many years. And then you have another big move when production starts. So as you can see, as they've been starting production and getting into full commercial production, the stock has been performing like a rock star. Down here, it traded as low as $3 in around July, and has pretty much blasted off since then, and went well through the 50-day, 200-day, had a golden cross in late 2022, and has continued to perform much better than a lot of its peers. And I think that speaks to the quality of the project, the quality of their mine. As you can see, the 200-day moving average is in a bullish trend. The 50-day moving average is on a very bullish trajectory, and the price of the stock is only slightly above the 50-day moving average. But catalysts are that the profits, that they're obviously the free cash flow that they generate from their mine, and also stronger market for gold, I think will drive this company much higher. So Orla is another one that I like a lot. Sokoman is in Newfoundland, and they have what they call their Moosehead project there. I'm very bullish on the Moosehead project, specifically on what is called their 463 zone. This is the deepest drilling that they've done in an orogenic gold system, and it's only down about a few hundred meters below surface. Now, it's important to note that in these orogenic gold systems, they're related to crustal faults. These crustal faults are very big cracks in the earth that the fluids that carry the high grade gold make their way up from. And they can be, these orogenic gold systems can go down several thousand meters. And they're at the top of an orogenic gold system, and they've already hit a jewelry box with bonanza grades of gold in it. And now they've only had a few holes into it so far, and sometimes these orogenic gold zones can take some work to understand. But once you sort of sink your teeth into a jewelry box and start figuring out the direction of that jewelry box gold mineralization with the bonanza grades, you can run into something like the Fosterville Mine Swan Zone or Gold Corp's Red Lake Mine. And when you get down deep enough into that system and you hit you start seeing more and more coarse grained gold. And as you get into the coarser grained gold, the grade goes up dramatically. And I think that that's what the future is going to take Sokoman with their Moosehead project. Now, another potential driver that could push the company's valuation much higher is they've got what I think could be a very impressive lithium project also in Newfoundland. They've only got a few holes into that, so it's very early days on the lithium project. But I had a good chat with Kim Froud not too long ago that you can find on my YouTube channel at Rocks and Stocks News, or on the Substack at rocksandstocks.substack.com. And we went over a lot of the key details and maps and images that shows there's tremendous potential for a lot of size to this system on their lithium project. So I think they've got two projects that could be company makers. Ultimately, I think the lithium project will get spun out to shareholders, and then Sokoman will focus on the Moosehead project. And so right now you're able to buy it around the 52-week low. I think it's way too oversold here. And I think it's a great opportunity and another company you should take a very close look at. All right, now I'm going to talk about another new sponsor that didn't start out just in the last couple of weeks. I brought Summa Silver on as a sponsor, and I actually made them a pick somewhere down around here, I think 60 some cents. It's closed today at 78 cents. What really impresses me about Summa Silver is they've got this project in New Mexico that they've released, I think, 9 or 10 holes from, and have come back with really bonanza grades of silver on that Mogollon project in New Mexico. And I think this is the making of a pretty tremendous silver system. And I think they've got a lot of legs left in that system and what's around it. And in addition to their New Mexico project, they also have a project up in Tonopah, Nevada. And that is about to start drilling in the not too distant future here. And they have the east side of the Tonopah district. And this Tonopah district was one of the most important silver mining camps in the world at one time, and definitely in Nevada. And they've been doing some drilling there and also hitting very exceptional grades. And so here's the lineup that I see for news and catalysts. They've got more assay results to come from the Mogollon project in New Mexico. In the not too distant future, they'll start drilling at their Tonopah project. Then they'll start having assay results from the drilling on Tonopah. Then they'll get back to drilling in New Mexico. So they're going to have a tremendous news flow over the rest of this year. And then when you also factor in that it looks like we're coming into a much more bullish market for gold and silver. And this is definitely a candidate for the kind of company that could significantly outperform its peers. Now, as you can see, it bottomed here and has broken out quite significantly since then. It's now trading well above the 50-day moving average and the 200-day moving average. I think they're only a matter of maybe less than a week or maybe a little more than a week from seeing a golden cross. And then I think the 50-day moving average is going to go quite significantly above the 200-day moving average. And what this bullish stock is telling me is that the market is optimistic about those assay results that they have pending from the New Mexico project, Mogollon, and also from their work to come up in Tonopah. And as a new sponsor, they're so fresh as a new sponsor that I haven't had a chance to interview their management of yet, but I intend on. I did write an article about them and included a lot of great information, cross sections of their drilling, the table of results that they've got from the New Mexico project, which also shows all the holes that are pending, and highlight holes from the Tonopah project. And there's a lot of really good information, and you can find that on my Substack at rocksandstocks.substack.com. Okay, and the final company I'm going to talk about today is Athena Gold. And now, Athena is so small that they don't even show up on stock charts, which is the site I use for my stock charts. But I'm going to go off stop share and sort of do some arm waving. What I like about Athena is I believe that this is the kind of company that could have an explosive move ahead of it. And why I say that is, first of all, they're starting from a very low base. And not enough people are paying attention to what they're doing, but I certainly am. I've interviewed their management and their key geological people. And the things that stand out to me from their project are they have a fault that sort of goes east to, well, it does go east to west on the, let's say, on the northern fault. And then they've got another fault to the south that both these faults go east to west. And there's they go that for a very significant distance. They stay about the same, so they're kind of perfectly parallel. And so you've got the rocks package there that suggests that they've got a path of least resistance for the fluids that carry the gold to make its way up to surface. So then when you see that kind of a faulting story, cracks in the earth for the non-geos out there, then you want to look for alteration, because as those fluids that carry the gold up to the surface interact with the country rock at the surface, they chemically alter that rock. And so you've got this big faulting area, and right in between it and covering a very large area is a big alteration package. Okay, so they got one box checked off, another box checked off. Now, the other most important box is that they've drilled 3 holes into what looks like, well, when it comes to grades from a open pit target with oxide gold, these are actually bonanza grades that they're hitting. Okay, now there's difference between bonanza grades in an underground mine and bonanza grades in an open pit mine, an oxide system. Now, a lot of oxide deposits are being mined at 0.5 gram, that kind of stuff. These guys were hitting multi-grams up to 15 grams over significant thickness. And so that's what I mean by bonanza grades for an oxide deposit. And they hit it over three holes that are starting to show some nice continuity inside, in the middle of this faulted area and in the alteration package. So they're checking off all those boxes, and just recently they announced that they're doing a private placement, and they're raising up money to get back to drilling. And the weather is cooperating, so they could get back in there pretty quickly. And I think that these guys are onto an important oxide, high-grade oxide discovery in Nevada, which is one of the best mining jurisdictions in the world. And I do believe they could also catch the attention of some major mining companies out there. You know, Anglo Gold is about 50 kilometers to the, or 50 miles to the south of them. And as I was talking about Orogen Royalties, they have a 1% royalty on the Silicon project, and that's an oxide deposit, but much lower grade than what Athena has been finding. Now, of course, Anglo has drilled a lot more holes, so it's a lot more developed, but nonetheless, the reality is, in the few holes that they've drilled, Athena's drilled and reported recently, they've got some exceptional high-grade gold for an oxide system. They've also got some silver and some base metals in there that which really intrigues me as to what is the plumbing system, or the mineralizing system, and what is, and what does it, what is it below that? That's an answer that will come out in the future, but I think just in the near surface oxide part zone, it could be very large. What pumped that mineralization up to the surface? We don't know yet, but there's some interesting sniffs, not the kind of base metal grades that are going to get many people's attention, but it's important to know that when you're high in a base metal system, you're going to, you're not in the primary part where you would get those high grades, but the fact that they're high up in the system and they're getting some sniffs of base metals is also quite intriguing to me. And so this, you know, company with under a $5 million valuation, I think has a hell of a strong story. And I invite you to take a look at Athena, Athena Gold, and have a look at their news releases. Also go to the interviews, because they've got some exceptional people working for them, very talented people working for them, that I've done interviews with. And you can find that on the YouTube channel at Rocks and Stocks News, or on the Substack at rocksandstocks.substack.com. So there you go. That's the third of a series of what I think is a brewing perfect storm for gold, silver, copper stocks, other metal stocks. And I'm giving you all my top picks in this series that I'm doing now, talking about my three key reasons why I'm so bullish on gold and silver and other metals. So as always, my shows are for information purposes only. It's important for you to speak with your financial advisors before making any investment decisions. And that goes for not just me, but any company you're looking at investing in. And I also think you should be doing your homework on any company, including the ones that I talk about. A good place to do that about the ones that I talk about, it's on my YouTube channel, where I've interviewed almost all the companies that I talk about. Their management, YouTube at Rocks and Stocks News, or on my Substack at rocksandstocks.substack.com. Then I'd highly advise you to go to their websites, look at their news releases, look at their corporate presentations, look at the maps, look at the grades, and do that homework. You want to be a well-informed investor, because well-informed investors tend to avoid making emotional trades based on day-to-day fluctuations in stock prices. They tend to be able to spot value before the crowd does, and make logical decisions with good time frames for success. And those are the kind of investors that have always done the best in the mining space. And I think that's the kind of investor you want to be. So on that note, have a great day and we'll talk to you soon.